Alright, so real quick, if you're watching this, you've probably watched like 100 trading videos this week. And honestly, I did the same thing for months. And guess what? I still blew many accounts. The thing that actually changed everything for me wasn't another YouTube video. It was sitting down and backtesting. Like actually properly backtesting. So in the next 20 minutes, I'm gonna show you the platforms I use, how I pick what to backtest, and the exact 6-step process I run every single time. I'm not a guru, I'm still learning every single day, but this is the stuff that finally made me consistent. So stick around to step 4 because that's where most people mess up, and it took me way too long to figure that out. Okay, so before we even open a chart, I need you to understand something. We don't trade indicators. We don't trade some magic strategy from a Discord. We trade memory. We trade the psychology of the people on the other side of the screen. And what I mean is, the market is just a bunch of humans making the same emotional decisions over and over and over again. People put their stops in the same spots. They panic at the same lows. They FOMO in the same highs. It's been happening forever and it's still happening today. So the market literally prints the same patterns over and over and over and over again. Your job is to recognize those patterns on instinct. And the only way you do that is with reps. That's it. Watching the videos might give you knowledge, but knowledge doesn't pay your rent. Pattern recognition does. And you only get that by sitting down and forcing yourself through hundreds, probably thousands of setups in replay mode until your brain just knows. I'll be honest, when someone first told me this, I rolled my eyes. I was like, bro, just give me the strategy. But after I actually committed to it, like a month or two of grinding replay, things started clicking. So trust me on this one. Or don't. But then, don't complain when you're still losing in 6 months. So let's talk about where you actually do this. There's a lot of options and people overcomplicate it so much. For 99% of you watching, the answer is FXReplay. That's what I personally use. That's what most traders I know use. And in my opinion, is just the best for backtesting. If you don't have the money for it, the free plan works. You can use the replay feature, click bar by bar, and learn structure. The limit is you can't really go below the 1 minute time frame on free, so you can't get the 5-second chart for precision entries. That's fine. When you're just starting out, honestly, I would say stay on the 5 minute or even the 1 minute for your first few months. You don't need 5-second precision when you can't even restructure yet. If you got like 30 bucks laying around a month to invest in yourself, get FXReplay Premium. That unlocks the 5-second charts, multi-chart layouts, and all that. Personally, I run the M1 for my setup, and 5-second just to see how price action is unfolding. That combo works well for me on NQ. Quick tip though, on FXReplay, by pressing Alt and 1, you can pause or resume price action whenever you please. But don't just let it play. You'll miss everything. Bar by bar is actually how you learn. A few other options if FXReplay isn't your thing. NinjaTrader and Sierra charts are good if you trade futures and want more advanced order flow tools. I've messed with NinjaTrader, it's powerful, but the learning curve is really steep. There's Forex Tester or Soft for FX if you want tick-by-tick data and you're more on the Forex side. And if you're still on MT4 or MT5, there's a built-in strategy tester which is really fine. But honestly, just open FXReplay, stop researching platforms. The platform isn't the bottleneck, your reps are. I see so many people who spend 2 weeks researching the best backtesting software, and they haven't done a single trade. Don't be that guy. But before you start your workspace, have your chart, have a note section open, and have a screenshot tool ready for taking screenshot of the trades and journaling them. I personally use a Notion page for my journal, but you can use Google Sheets, Excel, whatever you please. Just have something. Okay, so now you got the platform. Now what? This is where people lose the plot. Rule number 1. Pick one instrument. One. I'm serious. Don't be that guy on Twitter saying, I backtest gold, NAS, ES, DAO, EU, GU, and BTC. No, you don't. You're just confusing yourself, buddy. I trade NQ mostly. That's the Nasdaq futures. Reason being it's got clean structure, really nice volatility, and it's not as manipulated as some other pairs are in my opinion. If you're just starting out, pick one of the index futures, YM, ES, or NQ. If you're a Forex, just pick Euro USD, GBP USD. Pick one that you're actually gonna trade live and stick with. The whole point of backtesting is building your memory for that specific instrument. Every market has its own personality. YM moves different than NAS, Euro USD moves different than GBP USD, so pick one and learn its personality. Rule number 2, pick one session. For me, it's the New York AM session, roughly 9:30 to 11:30 Eastern. That's where the money is for indices. If you're in the part of the world when you can't be up for New York, trade London Open or even Asia. Just pick a session that fits your life and stick to it. Don't backtest random hours. Rule number 3. Pick one time frame combo. Personally, I use the M1 plus the 15-minute for entries. If you're a beginner, you need to read structure on a higher time frame before you zoom into the lower ones. Otherwise, you're just lost in the noise. And finally, rule number 4, and this is the one nobody likes to hear. Commit to at least 100 setups before you make any judgment about whether the strategy works. 100. Minimum. If you're gonna take 10 trades, lose 6, and say the strategy doesn't work, bro, you don't have enough data to say that. Variance is real. You could have a 60% win rate strategy and still lose 6 in a row sometimes. So just shut up and do the reps. Alright, so this is the meat. This is the exact 6-step model I run on every single setup. Let me walk you through on NQ real quick. Open your 1 minute as your main chart. If you have premium, you can also open the 5 sec on the side or as a second layout. We're gonna analyze structure on the 15 minute before we drop down into the 1 minute for a precision entry. Step number 2. Mark your protected highs and lows. What I mean by protected is the highs and lows that created the structure you're currently in. Not every wiggle is a protected high or low. That's just noise. You want the swings that actually mean something. The ones, if broken, would change the order flow. Draw the lines or just mark them out. Be picky. If you're marking 10 highs and lows in a 30-minute window, you're probably marking out too many. What I mean is a high, a low, a higher high, a lower low, and lastly, a higher high. That's the current structure that we're in. So step 3 would be figuring out the order flow. This is just asking the question, are we bullish or are we bearish right now? Are we in a range or are we just extending? Look at the structure. Higher highs and higher lows, just like we see here, it's bullish. Lower highs and lower lows, bearish. Trading with the order flow is going to give you a way higher win rate, especially starting out. You can trade counter trend eventually, but please don't start there. I know the reversals are sexy, but you'll get chopped up. Step number 4, and this is the one I told you to stick around for. Identify the highly probable zones, the origin, the SNDR zone, where the move actually started. This is the spot where price flipped internal structural before giving you that new institutional high or low. In this case, these two zones would be our SNDRs. This zone below would be our origin, but the origin has mitigation to it already, so we just use the SNDR. Like you can see in this example, price broke this high with a body closure and it traded higher. Traded back into our highly probable zone, our A+ setup, and traded away. What did it do then? Created another SNDR, broke structure with a body closure, and traded higher. Here is where I'm looking to enter on the retracement leg coming down. Step number 5 would be entering and actually taking the trade. I know a lot of you guys are scared to take trades, scared of losing, but what you actually need to do is lock in and just take the trade. Listen, if it hits the stop loss, that's fine. Honestly, that's a gift because now you get to ask yourself, why? Why did the setup fail? Was the order flow actually weaker than I thought? Did I enter in a bad spot? Was there a higher time frame imbalance that I missed? Every single loss in backtest is data. Every loss is teaching you something. Don't drown in your sorrows. Just learn from your losses. Step number 6, log it. Every single trade. Screenshot the entry, screenshot the exit, write down what setup it was, what the result was, and most importantly, what you learned. I have a Notion page where every trade goes. After 100 trades, you go back and see the patterns. Like, oh, every time I take a trade against the daily bias, I lose. Or every time I take a trade against the first 15 minutes of New York Open without waiting for confirmation, I lose. And that's gold. That's where you can actually improve. Look at this Notion page, for example. I have 541 entries on MMs alone. And every single piece of data over here is recorded. Like, let's use a random entry, for example. Oh, so we see it was a sell. When did it happen? What time did I enter on? What structure it was? Was it top of the range, bottom of the range? How many touches there were? Entry kind, swing count coming into the entry. It was it tapping into a higher time frame POI, the stop loss in ticks, the result, the RR that I actually took, and the RR that it delivered. And of course, I tracked if I could have BE'd at 1 hour. There's a lot of things that you can keep track of, and it's really important. Then you repeat and repeat and repeat until you're profitable, or dead. I'm only half joking. So real quick, before I wrap up, let me hit the mistakes I see people make all the time, because I made all of them. 1. Cherry picking. Only looking at the setups that worked, ignoring the ones that didn't. But you're lying to yourself. Document every single setup that fits your criteria. Win or lose. Number 2. Switching strategies every week. You take 5 losses, you panic. You start watching ICT's videos again, you change everything. Stop. 100 setups minimum before you judge anything. Number 3. Backtesting random pairs you don't actually trade. If you trade NQ or YM, don't backtest ES. Don't be backtesting gold because someone on Twitter said it's hot. Number 4. You're not journaling. If you're not writing it down, you're not learning. Your memory is not as good as you think. Trust me. And number 5, not screenshotting your losses. Your losses teach you more than your wins. Take the screenshot, look at it later. Find the pattern in why you're losing. Yeah, so that's it. That's the whole process. 6 steps. Really easy, really simple. Set your time frames, mark out your highs and lows, identify the order flow, find your zone, take the trade, log it, and repeat until it's automatic. I'm not gonna pretend this is some secret. It's not. It's just work. It's the work that most people aren't willing to do because it's boring. That's exactly why it works. If you got something from this video, leave a comment with how many backtests you've done this week. I actually read all of them, and it motivates me to keep posting. I drop the exact same journal template that I use in Discord, so join if you want it. Subscribe for more, and remember, strategy is memory, and we trade everything. See you in the next one.